let's talk about what's happening on May 22nd. We know the share price is up 1% right now. It's hovering 5% higher in the last month, but that doesn't mean loyalty is gone. Jefferies estimates that AI as a percentage of total chip revenue will go from 5%, which was back in 2022, to 25% by 2027. So it's going to continue to drive growth, especially with all of these deep budgets and pockets from the hyperscalers that are promised to spend. And Nvidia remains the favorite, given its control over the entire ecosystem, the software that's included, as well as the launch of its new Blackwell GPU chip for the second half of this year. So speaking of Nvidia, the early whisper numbers, we often look at this for Nvidia specifically, and this is according to Wells, is that it's going to be $26 billion for the April quarter, and that's total revenues, versus the street estimates at 24.5 right now. That means out of that 26 billion, at least 23 billion has to come specifically from data center revenues. And you were talking about valuations. Analysts keep revising their estimates, surprisingly, for Nvidia, just leading up to this report. And bulls would argue that the stock is trading at 37 times forward PE ratio, and you compare it to AMD at 44 times. ARM, you wouldn't even compare because that's way higher, 70 times. But what's important for this company is how the stock reacts post earnings. 16% higher in one day, like last quarter that we saw. There was 24% the previous quarter. That's going to pull in more money into semis. Or is it going to go lower, and that's really going to drive momentum out and maybe into software?
Nations have long invested in domestic infrastructure to take advantage of emerging technologies and boost their economies. Today, AI is the most important technology, turbocharging innovation everywhere and producing enormous economic gains. This is why countries are now investing in what we can call sovereign AI, which is basically the development of AI technologies in order to harness their benefits for governments. Back in February, Nvidia CEO Jensen Huang stated that every country needs sovereign AI, saying that it codifies culture, a society's intelligence, common sense, and history. And as more countries answer Huang's call for sovereign AI, Jefferies analyst Blaine Curtis believes that the company will continue to dominate the AI market, and he remains bullish on Nvidia stock. In today's video, we're going to explore Nvidia's major role in the rise of sovereign AI and why nations are pursuing it, in order to understand why Curtis is so bullish on the stock. Additionally, we'll discuss Nvidia's growth prospects and whether now is the right time to load up on Nvidia shares. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Yes, and I agree completely on what Adam is saying about Nvidia. It's the anchor of the AI halo. And I doubt very much that even if Nvidia was to deliver an earnings report, which would be disappointing and we'd see the price decline, I don't think very many people would move so quickly away from Nvidia. So, as I said, it seems to be the core anchor AI holding. What's interesting to me is what the effect is going to be of Nvidia's earnings on the rest of the AI halo. Because if I take three names.
About like critical?
So if I take three names, if I take Broadcom, I take Cadence Design, which I talk about a lot, and I take AMD, each of those stocks had their peak in March. Those stocks have done nothing over the last 60 days. They need something to resurrect performance, and it's really, they're reliant on getting something positive from Nvidia to do that. So I really think the AI halo is where you want to focus on off this upcoming report.
9 months after the unveiling of Nvidia's Grace Hopper superchip, the company announced at the ISC High Performance event in Germany this week that 9 new supercomputers around the world are using the chip. Nvidia also took the event as an opportunity to discuss its progress in helping individual nations around the world set up their own sovereign AI programs. Additionally, it shed light on how it is working with quantum computing partners to enable accelerated supercomputing at 3 major supercomputer sites. One supercomputer that was mentioned is the UK's Isambard AI, which is referred to as the emblematic of the sovereign AI movement, a recognition by individual nations around the world that AI can be of strategic and cultural importance to them, motivating them to own and host more of their own AI-related data, infrastructure, and workforces to foster innovation. Dion Harris, head of data center product marketing at Nvidia, said that Isambard AI is one of the most efficient supercomputers ever built, and he added that when it's enhanced by an additional 5,280 Grace Hopper superchips, as planned for this summer, its performance will increase by about 32 times. This supercomputer will be used to advance data analytics, drug discovery, climate research, and many more areas, and the UK is not the only nation that is currently pursuing sovereign AI. In fact, the Gefion supercomputer in Denmark, which has 1,528 H100 chips, and the Zhangzhou supercomputer in France, which has 1,456 H100s, also fit with the sovereign AI mission. With that being said, these supercomputers are a sign that countries are taking what Jensen Huang said very seriously, and this indicates that there's a new opportunity for Nvidia in a market that not many investors pay attention to, but it's actually growing massively. In fact, the global AI in governments and public services market is projected to expand at a compound annual growth rate of 16.9% from 2023 to 2030, reaching a value of $51.78 billion that year. Nvidia already has 90% of the AI server market, so it won't be too surprising if it ends up capturing a massive percentage of the sovereign AI market as well. This might sound a bit optimistic, but if Nvidia manages to capture 90% of this market, it could generate an extra $45 billion in revenue by 2030, and since Nvidia is known for smashing expectations, we can't really rule that out. So, there's no denying that Nvidia still has more room to grow, and this is an opinion shared by many analysts on Wall Street, including Jefferies analyst Blaine Curtis, who recently put an incredibly bullish price target on Nvidia stock. Let's take a look at what he had to say. Hello everyone, and welcome back to Investocracy.
Broadly, semiconductor index, the Philly SOX index is up about 1/3 of 1% here in real time, Renita. That is outperforming all four of the major indices. And arguably the reason we still see the NASDAQ above water right now as these semiconductor stocks have been so strong.
They have, but it's a little tempered because they are mixed today. And a lot of that has to do with some of this commentary coming from Jefferies. Now, Jefferies on a whole is more bullish long-term on these chip stocks, believing that they're in for another big rally after a little bit of a pause with some of them. Some of them even receded a little bit from their highs. But in short, this analyst feels like investors should buy on the dip, essentially, and that it could be a pretty good buying opportunity, and that chips are still pretty early on in their cycle to see a huge rally and to see all of that success, and that these three that I'll talk about are particularly important because they'll be stronger with AI. So the analyst over at Jefferies did change price targets on many more, but I'm talking about Nvidia, Applied Materials, and Texas Instruments. Now, Nvidia, of course, is the favorite. It's everybody's favorite. And this analyst actually said that it's the favorite of the company. Jefferies assumed coverage with a buy rating and boosted the price target to $1,200 for $780. And this one has been trading in a little bit of a tight range over the past few months. And Nvidia, it's still expected, however, to maintain its dominance over the other chip stocks. But we can look out for more because it reports earnings on May 22nd. And it is expected to see earnings jump more than 400% for earnings per share year over year.
Jefferies analyst Blaine Curtis said in a very recent research note that he believes it's too early to sift out winners and losers in the AI basket yet, but he can't help but say that Nvidia is Jefferies' favorite AI play. He said that Nvidia maintains control over the entire ecosystem and is taking more pieces of the pie. He also pointed to demand for the company's NVL72 liquid-cooled rack system, which contains 36 of its GB200 chips, as something that could help it take even more of the AI infrastructure market in 2025. Finally, he gave the stock a buy rating and raised his price target from $780 to $1,200, which is a massive upside of 32% from where the stock is currently trading. With that being said, it's not just Wall Street analysts who are singing Nvidia's praises. In fact, some investors are choosing to invest in Nvidia stock rather than other assets like gold to hedge against inflation. This might sound surreal, but Nvidia investors should really get used to this. Now, let's find out why they think so. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I welcome back Alex Coffey and Kevin Green. Guys, Nvidia, 9 days out. Not a lot of individual names are going to move the market, right? You're seeing the macro move the market and earnings move individual names. Nvidia, in 9 days, May 22nd, will probably move the entire market, guys. I'll go to Alex Coffey first. Alex, your thoughts. We're 9 days out. The stock is moving significantly just about every day. It's up about 1% today. What are you seeing?
Well, first off, you were saying it's probably going to move the market on its earnings. I'd make the argument that it moves the market every single day. At this point, it's trading at about a 60% implied volatility, and you're talking about a multi-trillion-dollar company. So few names, actually, I don't think any name has really ever done what Nvidia is doing right now in terms of its impact on the market, simply because most names that amass that kind of market cap don't trade with volatility 4 times that of the overall market. So you had that with Tesla for a little while when it was crossing that trillion-dollar mark a few years ago, when it would always, trade at a pretty hefty implied volatility premium. But Nvidia's, way bigger than Tesla ever got, and it's just as volatile. So it's as important to this market right now as arguably any name at any point in any market cycle.
According to the latest Bloomberg Markets Live Pulse survey, 30.4% of the survey's respondents think that Nvidia could be a better bet than gold when it comes to hedging against inflation. This highlights the dominant role Nvidia is playing in the tech market as well as financial markets as it expands its influence over major parts of the economy. Also, Nvidia has been able to generate steady profits even amid high inflation, fueling a rally that suggests it will continue to deliver solid gains no matter what. Moreover, Nvidia has surged over 600% since inflation first rose above 2% in March 2021, dramatically outpacing the S&P 500's 30% gain. In contrast, gold is up a more modest 15% this year, and its upside has been limited compared to Nvidia's meteoric rise. Still, it's important to note that Nvidia and other growth stocks remain sensitive to inflation and interest rates, but the company's strong performance shows its ability to power through economic uncertainty. So, for investors concerned about persistent inflation and seeking assets that can hold up against rising prices, Nvidia presents a potentially more rewarding opportunity in today's market environment. But naturally, this is leading some investors to question whether now is a good time to buy Nvidia stock or wait for a potential drop in the stock price. Trent Masters, a portfolio manager at Alfinity Investment Management, suggests that the stock is still a good buy despite its significant rise. He points to the chipmaker's strong market share and sustainable earnings as reasons for his bullish stance. He also mentioned that he personally missed the initial run in Nvidia and only bought the stock when it rose to $390 last May after its results. He said that this was probably one of the hardest things he has done in the last 10 years, as he bought a stock that was already up so much, feeling like he was making a mistake. But he said that investors just have to view these things objectively. And I agree with his point of view. If we keep waiting for a potential drop, especially with a stock like Nvidia, we might end up regretting not buying if the price goes up. On the other hand, Adam Coons, a portfolio manager at Winthrop Investment Management, is advising caution. While Coons acknowledges Nvidia's strong position in the AI chip-making segment, he believes that current valuations in the market are inflated. Therefore, Coons is reducing his holdings and waiting for the stock's valuation to normalize before considering further investments. He also added that for the long term, Nvidia is definitely a company or a stock you want to own, but he just thinks you need to be careful in the short term around some higher volatility and some bigger swings. Overall, for long-term investors, Nvidia remains an attractive investment in my view, given its competitive strengths. However, in the short term, the stock could see higher volatility and some correction based on the high valuations. So, a balanced approach of buying some at current levels and waiting to buy more on dips may be sensible. However, the long-term growth story remains compelling, so long-term investors should think through the risks and continue building positions. Timing the market is tough, so dollar-cost averaging may help manage the pricing risk over time. So, what do you think about Nvidia stock? And what are your expectations for Nvidia's future? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Nvidia is. If you would like to know more about the latest updates about companies like Nvidia, then go ahead and click on the next video on your screen.